Right, hello guys, welcome. I'm going to show you guys another live trade that I just entered. Currently the date is Wednesday the 10th of November. It is 11:32 and you can see guys, this is the trade I've entered. It is another EJ trade and you can see we've just got tagged in there. And you can see the time there is 27 minutes left to the top of the hour. So this is the current trade I'm in. So guys, just like before, I'm going to show you guys my thought process, show you guys how the trade plays out. And yeah, let's take a look and see what happens. Right guys, back to the EJ trade. It is currently Wednesday, 10th of November. It is just gone 2 p.m. So you can see here guys, we have started to impulse up. So you can see the candle is moving quite with a lot of volatility. You can see we've got a really nice tagging at the bottom and we've moved up. Essentially we've broken the high, so I've essentially reduced my risk to around minus 0.33%. You can see that it's 58 minutes left to the next hour and you can see the candle still moving. We've got quite a nice push up and this is exactly what I expected on EJ. So again, you know, I want to see how this plays out. It's great I've reduced my risk, but once this trade is done and completed, I will show you guys my thought process. But yeah, this is very high probability trade with me on EJ. So anyway guys, take care. Right guys, so as you can see on that EJ trade, I had been taken out just here at the bottom somewhere here. So I had a reduced risk loss of around minus 0.33%. So on the next clip, I'll show you guys my thought process on this trade. Right guys, welcome. So as you saw, this was the EJ trade I took. So I'm going to actually take you guys step by step through what I saw and why I took a trade at this point down here. Now, one of the things that I want you guys to understand is if I bar replay this probably to around back here would be great. Okay, one of the things that I know, like I always tell you guys, like the best way to understand a pair is always to just look at it completely naked, without any indicators, without anything. Just read the candlesticks and try and like understand the movement of the pair. Now we know that, well, from my experience personally, is that EJ can have a lot of fake outs. Essentially, it has a lot of these V shapes, right? It is absolutely everywhere, which is completely fine. That's not a problem. But one of the things that I notice is that the high probability setups for me personally come in from the channels, okay? So reversals from the channels. So for example, guys, you can see that here, we can clearly see we've got this rather long, even if I zoom out actually, just squeeze this a bit, we can see that we've got this really long, really large descending channel, right? And even if you guys didn't really see that or thought that that's not a direct channel, and you can even see nice liquidity grabs in this channel. So say for example, if I drew a couple of trend lines here, so if I drew a line here and if I drew a line here, for those of you that actually enjoy trend channels like this, trend lines, you can obviously see that there was a nice piece of liquidity grab up in this location here. Price pushed up and then continued its direction. So I talk about this kind of liquidity grabs by money managers quite a bit. But anyway, essentially you can see we've got this descending channel, right? Now, one of the things that I look for when we have a descending channel on EJ is where price starts to get exhausted and essentially shows a nice move to the upside, okay? So essentially in this piece of price action all around here, I was essentially seeing this descending channel, okay? And now what this tells me is that price is trying to go down. We have sellers that are trying to push price low. So you can see we've got a low here, again, struggling to go down. Again, we've got another low here, struggling to go down. You can see that this kind of gradient of this trend line here is starting to shallow out. So essentially, the sellers are dying out. And for me, I'm kind of looking for buyers to come in and show that we're going to have some commitment to the upside, right? So that's what I'm looking for. So essentially, we've got this larger channel. So if I see some kind of smaller piece of price action within this channel where price is really struggling down and then we see some commitment up, then for me on this pair, this is really nice and high probability, right? So guys, I want to show you candle by candle what happened. So you can see that essentially we've got this kind of level. I'm going to draw this level here. You can see that we are tapping in and out of it, to me, just around here. You can see that it's hitting it and bouncing off this area. So to me, it all came down to how are we going to break this area here. So as you can see, we've got a couple of candles. We're pushing down with wicks. And this candle, you can see that this candle really tried to push down. Even the lowest price in this whole price action before this candle was this candle here. You can see that we've got a low here and this candle just barely broke it. So we are really struggling to go down. Now for me, that is absolutely fine and good to see. But like I say, I'm an evidence-based trader. I like to wait and see what price action is telling me. Then of course, this is what happened next. We saw another wick to the downside. We're seeing this group of wicks really pushing down, really struggling. There's no momentum to the downside. And then afterwards, we started to see this. You saw this candle, then this candle, this kind of bullish candle with a little wick, then we saw this candle up, then this candle, and then we had this candle. So from this price action, essentially you could see that essentially we had these 4 candles, this one, this one, this one, this one. Can you see how much we've pushed up? And especially this candle is very, very large. We can see this really, really nice, strong push up. Now, one of the things that I like to watch out for on other pairs that are not EJ in particular are pullbacks. So for example, you can kind of see with this kind of momentum seen here, for me, I would like to get onto retraces. So for it to retrace all the way back here and then push up is a huge ask for the other pairs I trade. I'm sure you guys have heard me say that typically when you see a push up like this and a push down like that very aggressively, you sometimes start to see a range and then price will shoot off in either one direction or the other, typically on the direction of this kind of second leg. So for me, on this pair in particular, it does, like I always said before, it does like these V's. It loves these V's, right? But now in this kind of price action where you're seeing this kind of descending channel and you see this exhaustion towards the end and you see this nice push up, then to me, I'm happy for a V to form like this, because I know when you have price action like this, the next thing that happens is it shoots off. This is very, very high probability with this pair. And guys, for proof of this, I'm actually going to show you another example at the end of this video. So this is what I was seeing in this price action. So for me, my order was on after I saw this candle here. I was happy for, if it did decide to pull back and tap me into this area here, then I'd be completely okay with it. That's fine. And then I'll just see what would happen after that. For me, on this pair in particular, after doing a lot of chart work, just reading candlesticks and their movements, this is very, very high probability for this pair in particular, okay? So as you can see what happened next, we've got a retrace candle here because we had a wick and we pushed back. And the next candle you can see, we got tagged in with this really, really strong push down, okay? So you can see we got V again, but like I said before, typically at the end of this kind of exhaustive period of the channel, we have a V and then we push up very strongly. And that is exactly what happened next. You saw we got a bullish candle here, another very nice bullish candle, and a really nice bullish candle here, which was absolutely fantastic. Now, one of the things, like I always tell you guys, I like to use a trailing stop loss. This is what I use all the time. I think it's a fantastic way to negate any emotions when it comes to coming out of a trade. Because, for example, I know a lot of traders out there would use Fibonacci and kind of aim for this risk to reward ratio of like 2 or 3, but you never know where the trade can take you. It can go on to make 10-15% like some of my trades can. So for example, you can see here, guys, we were running at around 5.37%, right? Which is absolutely fantastic. And because we kind of broke this level here, you guys, you can see that there's a level here. We broke this with quite a bit of momentum. I was able to reduce my risk down to around this level here. So to me, this was actually around minus 0.33%, so a third. So essentially, I mitigated my risk down to minus a third of 1%, okay? So that's absolutely fantastic. So again, you know, completely fine, completely happy with that. And now, of course, the next price action, what happened next, you can see, guys, if I quickly get rid of these support and resistance levels, you can see that price decided to retrace heavily. Then we've got a counter trend candle, we've got a nice inside bar here, and then after that, price really started to push down. So we saw this volatile nature, and this candle itself, you can see that this candle broke a low here with my trailing stop loss, and of course this was the candle that took me out for that minus 0.33% loss. So to me, this was high probability. The reason why I got in this trade is because I anticipated this momentum to happen after this price action here, right? And this is what I mean. This is what I mean by why it's very, very important just to read candlesticks on their own, because it is very evidential with this pair that this is a really, really nice setup and it bodes well with my strategy, okay? Now, there's a few things I want to note here before I go on another example of why I took this trade and where you can see this in previous price action in history. I'll show you another example that's very similar to this. Is that one of the things I want you to know, guys, like, look, like this trade was running, of course, at around, let's say it was at, like I said before, it was around 5.37%, right? Now, I know that there's a lot of traders going to be watching this thinking, oh my gosh, that is a lot of risk to reward, right? That is, you know, you should take it out at that point. But firstly, for example, like I say, I'm a trend trader. I don't know where this can go. This can go to 10%, 15%, 20%. It might just start trending up. Who knows? It could just easily just have retrace, come up, and just pushed up. And so for me, you know, that is absolutely fine. I know a lot of traders, this is a key lesson, like, if your management rule says do not take your trade out at this level, then don't. Stick to your management rule. So as you saw, guys, I got taken out for a small loss, But I'm completely happy with that because the most important thing is I followed my trade plan and my trade rules. So guys, you must, even for the beginner traders out there watching this, you must have trade rules set out and you must follow that completely. Because for me, in a scenario like this, typically EJ would just go on and make 6, 7, 8, 9, even up to 15%, right? And I'll actually show you that now, guys. So there you go. Remember, guys, that's the key message. Always stick to your rules because that is what will help you with consistency, and that's what we all want to become, consistently profitable traders. You can only do that if you stick to your management rules, okay? So I'm completely happy with that. I put 1% of risk on the table and I came out with minus 0.33%, so completely happy with that. So I'm going to show you guys another example quickly of what I just explained with that kind of descending channel, and I marked it out here. So you can see, guys, this was a trade where the same sort of thing happened, but this actually worked out. So of course it actually locked in profit, okay, which is completely fine. And you can see essentially, if I bar replay this back to here, you can see this is very similar. This is common with EJ, guys. You can see that we had a push up and you can see we're in this descending channel here, right? This really nice descending. And you can see that price is starting to exhaust itself down here. You can clearly see, guys, we've got double wick here, and like almost literally 4 wicks to the downside here. So for me, I'm waiting for any nice evidence for a nice push up. And if it pushes up, I'm definitely in at the lowest level. You can guys, the guys that like support and resistance, a level down here. In fact, I'm just gonna pull this down a bit. I'll be in at a level around here. So as you can see, guys, the very next candle here, it pushed up like this, and then this happened, right? So you can see that even if I draw another level around here, oh, definitely not a circle, a nice level here, guys, you can see we are actually breaking it with a lot of momentum. And this is what I mean, like even some of the guys might think, okay, we're just broken this support / resistance level with a wick, but essentially, guys, this is what I mean by reading candlesticks. Look, if you look at these group of candles itself, you can see that this is pure momentum, right? So for me at this point, I would have been completely happy to set an order at around this level here, all right, around here. Like you can see that's dead in the middle of that zone. I put my 12 pip stop loss, and you can see what happened next after this. If I just remove these trend lines, you can see the very next candle tagged us in, and then of course you saw what happened after that. Price pushed up and absolutely shot off. And this is what I mean, like by doing your kind of reading price action, reading candlesticks, right? This price action actually shot off, and it actually went off and actually secured profit. So I think this actually went on. You can see, guys, I'll show you why this trade worked out. You can see we ranged quite a bit. We had this push up. Again, even at this point in time, my risk would still be reduced to near enough break even, but still a little bit of risk on the table until a high is broken, until we break this kind of support that was hit here, right? So this has to be broken. And as you can see, price broke that level, so I would have secured in profit. And essentially, I think it would have been this candle that would have taken me out, okay? So I would have been taken out of this trade at around this level here. So you can see, guys, this trade itself that was in May earlier this year, you can see this secured 7.6%, okay? And like I say, the whole point of this, like the whole point of the trades is trying to put yourself in the best possible position to take advantage of the trend if you're a trend trader, right? And this is another example of a trade that worked out. So there you have it, guys. As you saw from the trade I took, like I was happy to take that trade. You saw the reasons why. You saw what I see with EJ and what's very, very high probability. This kind of scenario with EJ is very, very high probability. So I was happy to take that 1% risk. But like you saw, guys, it was running in profit and it came to take me out for a loss. But the key thing, you guys, I'm sure you realize, is that I am absolutely okay with that. That follows my plan. I know in the long run that the profit expectancy of these kind of trades is high. You would have seen that if I took that trade in May, which I actually didn't, because this is the kind of time when I was learning to trade and learning the strategy from my community, that would have been 7.6% on that strategy in particular. And then I would have waited for a nice opportunity like we had as you saw this trade. And I would have taken out for minus 0.33%. So you would have seen I would have been total of those two trades about 7.2 something% up, right? Or whatever it is, right? 7 point something% up. And that is what I'm talking about. It's about being patient, sticking to your rules, because that is what will help you to be consistent. And like I always say, a trailing stop loss always works well if you're a trend trader. Right, guys, I hope you enjoyed this video. I I hope that gave you a really nice insight into another one of my live trades. Guys, if you like this video, please give it a thumbs up. I'll do more live trade videos and show you what I'm looking at. But again, the key message in here, like I always say, is trade management. Stick to your rules, okay? Always stick to your rules is the most important thing. And to me, it's the only thing that will bring you to consistency and becoming a consistently profitable trader. But like I always say, guys, if you had any comments, please feel free to write it down in the comment section below. But for now, if you haven't subscribed to my channel, please subscribe, hit the bell icon if you like content like this. But have an absolutely fantastic trading week, and I'll see you guys soon. Peace.